about. That was fantastic, wasn't it? 58s down to 25s. 33 points. $1,500 of rejectionable sell-side opportunities. That's pretty good stuff, guys. That is pretty powerful right there. When you get into these areas, you are making key decisions. And that was a key decision that drove $1,500 into your bank account if you decided to make the decision at that point. You all knew about the decision because you had it in your tweets. We talked about it several times in the classroom if you didn't already see the tweet. So you already knew about the decision. We highlighted the 58s, 57s, 56s to you. And if you decided to act on it on the short, amazing profits. Absolutely amazing profits. That is a really, really nice winning trade there if you decided to act on that key strike. Now, why are keys so important to that strike price? Well, keys are so important simply because dealers deal in those areas. It's not because we say they're important. It's because the dealers themselves are going to be making a major decision in that area. It doesn't matter how you dice it. It doesn't matter whether it's me telling you or whether it's somebody down the road telling you or whether it's your cousin's auntie telling you. It's all about the fact that that is going to be a major decision. And if that's going to be a major decision, your job is to try and figure out what that decision is going to be. Relatively straightforward, isn't it? Relatively straightforward. It means you've got to look for it. You know it's there. You've got to still try and come up with that decision process. Now, that's important because when we look at things like bonds, and we'd obviously been working that short sale on bonds, obviously the whole thing flipped. We lost the quality on the touch spread. It became a sell trade on the touch spread, and that was the end of the short sale. So we loved this short sale at 0-1s. Loved it. Got a great trade down to 21s. Brilliant trade. However, you can see here that we lost control of the touch spread, didn't we? The touch spread became a sell trade in this area here rather than a buy trade. And at that stage, you knew that there was a higher probability at that point that we're probably going to spike higher on the bond. And we did spike higher on the bond. And obviously we were off the trade at that stage anyway, 145 as a scratch. So still, as I said, 3 trades worth $1,000 off the top edges is still better than a kick in the chops. But obviously getting away from that trade is worth every bit as much. Getting away from that type of trade, knowing that we've lost control of the spreads. Even on that red candle, there was a lot of value to buy that bond. A lot of value to buy back on that bond. There's the buy trade potential at 31s for a spike. So if you took the buy, I like how you're actually watching and analyzing this in real time as you see these trades eventually evolving. We've got the oil coming out, guys. So we're on oil for the second here. We'll bring... What's happened to NinjaTrader? We'll bring the oil charts into focus. Okay, so let's take a look at oil. Oil! Okay, so how did we do this last week? We basically start working our way through these as we get closer and closer to the numbers themselves. We start looking for where the key references are. And if they're close enough, we join them together. If they're widespread apart, we leave them widespread apart. Okay, so that's what we start to do in these areas here. So there's your keys on the oil right now, right there. $74.80, $75, $74.10, $74. So that puts us into a fair value price of about 74.5. 74.5, surprisingly enough, exactly where the current oil price is, $74.50. All good? Well, let's take a look at what would we prefer from this release. Well, according to the dollar, we would obviously far prefer the narrative to be a B-boo, Paul, to be honest. We'd actually prefer a B-boo, would we not? Because the dollar obviously is giving us quite a strong offer today. And against that strong offer, we could obviously be a buyer, perhaps down into that lower edge of $74 and maybe take a little buy flip with the dollar as bearish as it is today. It would be a nice trade to be able to bid the 74s. So when we think about the best strategy, we would obviously be able to look at this and say, well, based on the dollar's offer, and it's quite a heavy offer we've seen since the overnight session, isn't it, in the background? So we've got this very heavy offer coming in on the dollar. It'd probably be better if we actually got a B-boo trade into $74 to catch a bid against that weakening dollar. Does that make sense? About your preference? Because obviously if we get a booby, are we going to trade it? Think about it. If we got a booby there, would we trade it? So in other words, if we get a first initial response which is bullish and the price drives from the actual data, if it drives into the top, am I going to sell it? For the B part? Possibly not, right? Because of the dollar's weakness, that would cause us a problem in terms of a value, wouldn't it? It'd be a value problem for us to take that trade on. So it'd be far better from a value perspective as if it drove down here, wouldn't it? Would you agree with that? So from a value perspective, a drive down into this area, knowing that we've got some value still on the dollar to buy into, to then take us back up there, would be the best strategy based on relative value. If we got it, that would be the best trade. Now, the only benefit we've got at the moment is the short term has gone dollar bid. That's the only advantage we've got, is the short term dollar bids coming in. So if we got a big enough press through the top edges, it might create enough difference in value to get the short sell in, but I'm leaning more towards preferring the opportunity to buy off the bottom edges after we called that amazing trade. 74.5 to 73s was just sensational. 73s to 75s was even more sensational, but we called the $73 oil 14 hours before it happened, 8 hours before it happened, whatever it was before it happened, we called it before it happened. Whereas we didn't call this one before it happened, we just talked about it in the room at the time. We said if you're going to be doing anything, you might want to be flipping that trade, and that's what we talked about this morning in class. So we know we all love the boobies, but this time I think we might actually prefer the B-boos. Yeah, we might prefer the B-boos. So watch for it, watch the numbers. Let's see if we get it. Let's see how it plays. And we're only just a few minutes away from the numbers.